Okay, we're getting to the business end of the course, learning to day trade with Tony. I am, of course, Tony, as you all know by now. And in this chapter, we're going to be talking about trading as a business and having a business plan. So I think it's incredibly important that if you really want to be a professional day trader, that you do treat it exactly like that, like it is a business. You know, being a professional trader, you can make a lot of money as a day trader. But if you're going to invest your time in this, it's not a part-time hobby to just be played around with. It is a full. It does take a lot of energy, and it does take a lot of focus. So, you know, it's important that you treat it and give it the respect that you can. Okay. Also, will be some of the written trading plans, the written trading strategies that you need when you're trading. So, you know, because trading is a business like any other, if you want to be successful, you need to be organized. You need to have the trading plan first and foremost, and also a business plan ultimately. So, as a professional trader, you know, you just because we're working from home and you know you can work in your pajamas or you know your cargo shorts or whatever it is, it doesn't mean that you shouldn't take it seriously. It's one of these jobs that even though you might want to think of it as a part-time hobby, you know, you day trade a little on the side. The reality is the amount of effort it takes to be successful, it's tremendous, right? It takes a lot of time, both in terms of study and watching charts, and you know, being in trades and you know, being patient, just sitting on the sidelines. It takes a lot of time, and it takes a lot of energy as well. You can be successful, you know, whether you're ultimately just going to be a part-time trader. It takes a full-time commitment. And the best way to organize your approach to trading is to develop a business plan. Being a day trader, you know, we're most of us are self-employed. Okay, we're self-employed day traders, and this is what we do to generate our income and to support ourselves and our families and our inner circle. So having a plan in place that you can refer back to will help you on those days where you know it's a little rough and you feel a little deflated, a little lack of confidence. You can always return to what does my business plan tell me to do? What is my go-to strategy? You know, what do I do in this situation? So whether you're, you know, if you're a professional lawnmower or garden, you know, horticulturist or whatever it is that you do. If you're a professional lawnmower, you've got a lawnmowing business, or you know you are a truck driver, taxi driver, or whatever. A business plan is going to help you clarify the goals. You know, it's going to clarify the goals of your business and what it's going to take to achieve success. It just helps clarify where you are today with where you want to be in the future. Okay, your current reality and where you want to be in 6, 12 months' time. Having those goals laid out is really important. And you know you can always go back to it and they will keep you on the path or you know keep guiding you on the path. You know, um, you're going to start off, you're going to be a struggling trader, and this is going to give you keep you on the motivated to become a successful trader. For me, there was quite some time where uh, I said, do you know what? I'm just gonna focus on this one strategy, okay? Because that first period of my trading career, I lost so much money. I lost a lot of money, just haphazardly trading, you know, trading the market. I mean, I suppose the easiest thing for me to say is that I had more money than knowledge, and I just didn't know what I was doing. I was giving my money away to people that were better than me. So the next period of my trading career, I thought, okay, I'm going to focus on educating myself, and do that meant studying as much as I could, learning learning the relevant skills necessary, and just focusing myself down, a few months, and developing a strategy that I could trade independently, where I wasn't following anyone blindly. I wasn't mirroring somebody that on YouTube or whatever, that was some kind of internet guru or whatever. I keep saying, you watch me on YouTube or on TikTok, and I keep saying, don't follow me blindly. I'm not taking signals or stock picks or something like that. It's the same thing. I was trading strategy independently on my own, something that worked for me. Okay. So having, I made that my goal, and then I was able to step back and look at what I've done over the last year, for example, and say, look, I've done a good job. I started off. I focused on the education. I lost the money first. Let's be real. I lost my money first, and this is what I don't want you guys to do. Okay, I don't want you guys to just throw your money away willy nilly, aimlessly, trying to copy someone on the internet, or trying to get into the markets without a clue of what you're actually doing. So what I'm giving you here is the skeleton that you need to build out the flesh. Okay, I'm giving you the skeleton to do this. I did my education. Consider this your education, but this is not all you need. You need to continue to dig in, and you need to focus on your education. Okay. Um, you not. It's unlikely that you're going to make a lot of money to start off with. And so don't just look at somebody and say that's what I want to do. It's great to be aspire to have a successful trading career, but let's scale it back. Let's start slow, and let's learn how to do it first. Okay, that's what I would say is the most important thing here is start off with the education. So with trading specifically, the plans that I'm going to I'm talking to you about are going to be really mostly about your trading strategy. What is your trading strategy? And we've already covered what my go-to trading strategies are. There are a lot more out there, but you can start with the trading strategies that I'm giving you. By all means, go out and find a good strategy that works for you. But when we start talking about your business plan, we're really mostly going to be talking about trading strategies. And anyone that's written a business plan for how to run a business, if you've been self-employed before, that sort of thing, that's something that's worth spending time on as well. Okay, but for right now, we'll just talk about the approach as it comes to day trading. Now, so the basic business plan as a day trader. What's your strategy? What strategy are you going to trade? The setups, the stocks you trade, the time of day, um, right? You also need to know your statistics on that strategy. Okay, so how do you manage risk? The risk reward ratios. What's your average profit loss on your trades? You need to take notes. You need to make sure you have the ability to track all this information. Right? What's your goal for the next 6 months on that strategy? A lot of this is about knowing your stats, and knowing your percentage of success, knowing your average profit loss ratio. The only way you're going to know this information is if you're tracking it. You know, you're tracking your trades. You can do it in an Excel document. I keep saying I put the links up at the end of every lesson that I use TraderView. Now I'm not saying go there because they're giving me a kickback, or because I'm using them. That, you know, I do use them and I find them very good. Now, if you want to go and check them out, there's a free plan. It's a freemium. It's a freemium plan. So the basic option is free. You can just sign up for free, and you know they'll give you up to 30 trades a month to track. Okay, so that's on the free option. If you like it, then obviously you can upgrade if you think you're trading more than that. But just go in there, set yourself up an account on TraderView, and with the free option, it's not going to cost you anything. So set yourself up on TraderView, or one of the other things. It's you can do it in a spreadsheet, but it's just much easier. It's much easier to do it. You know, import all your trades, because you know, if you're going to be doing it in a spreadsheet, it's just add a little bit more work. You've got to go in there during the day and update it, all your trades, take notes, all stuff like that. But if you just import your trades directly out of the platform into TraderView, it's all done for you. Okay. But either way, if you've got that log of your trades, you're going to be able to look back on that history of your trading history over the course of say 2, 3, 4 months, and the data, and realize that wow, I'm really good in the morning, but I'm not good in the afternoon. You know, or you might, whatever it might be, you might think that yeah, first thing in the morning at the open, that's when I'm having more success. But I'm giving it all away. My profit loss is in the simulator is looking like I'm losing money. But then you look at it, you break it down. You say, well, I'm only losing money in the afternoon. So if I stop trading in the afternoon, will I be profitable? Well, if you continue to do that, you might say, well, okay, well, I'm profitable in the morning. Whenever I take a trade in the morning, I'm just giving it back later in the day. So stop. That'll give you an idea to, okay, stop trading in the afternoon. So having that information is really good. Having that information allows you to formalize a plan. Okay, so having that ability to do that for me was really huge. It was a big turning point. Okay, I was tracking in an Excel document and I wasn't being very disciplined about it. If I'm being completely honest, to start off with, I still use Excel for planning the direction I'm taking, how much I need to be making on a daily basis, etc., and goals and things like that. And I'll, you know, if you want, just let me know, and I'll show you the kind of Excel documents that I've used in the past. But when I started using TraderView, it seemed like I took my trading to the next level, the professional level, because I got all that information directly to hand. Okay, so what I was recognizing in that data was where I had a natural strength, and in a lot of cases I wasn't even aware of it beforehand. I wasn't aware that I was making money on pattern-based trades until I started looking at the stats, and that's where I saw a high percentage of success was on those pattern-based trades. Okay, so we're going to look at the, the sub strategies. Okay, I'm going to just pull these up. Was just waiting for this to resolve. Okay, so this is the gap and go strategy that I like. This these are written strategies for the three strategies that there are more, of course, but these are the ones that I trade on a day-to-day basis. These are probably the most traded strategies that I actually use. Okay, so on a day-to-day basis, you can usually find me trading one, two, or all three of these strategies. Okay, now I've got the links here to them. I'll give these in a Word document to everybody that's on this course as well. and you can have this broken down. Okay, so uh, the these are the three that for me are my bread and butter. The what makes trading every single day um, profitable. Okay, so if we look at these strategies here, and uh, that's one. Let me just so I'll just go back to the other one and the last one. So you can get these. I've uploaded these to my website, so you can actually see them. So you can actually see them, and my PowerPoint's just died, so I just need to get back in that. Okay, so I've uploaded these to my website, so you can so you can actually see them. And what I would say is the great strategies to use. So let's first look at the gap and go strategy. Okay, so on this we've got a complete strategy checklist. So when we're looking at trading the gap and go, you have to do a little bit of checklist, and this is part of what we're looking for. Uh, we're looking for uh, the characteristics of uh, when we're going to get into a trade. Okay, so this is part of my strategy. Uh, I have Word documents that print this out, so you can actually see this. You can print these Word documents out. They'll be included in the lesson planner as well. So as you come back out of this video, you'll be able to download these in Word document format. Okay, but I have it printed out on my desk. And we're scanning for all the gappers that are like 14% up, 15% up. Okay, I've got four there, so that should be 14. So it's more than 14%. So we're looking at 15% and above. Okay, we're hunting for catalysts. Right, so it could be earnings news, or it could be an IPO, or it could be FDA approval, anything like that. Okay, um, it could be just moving on the on a segment of the market. So, recently I was trading in the Indonesian energy, and that was based on the strength of the energy sector. And because it was a low float stock, that was the one that was picked out and singled out. So, so we're looking for catalysts. So we're just scanning for gappers. Okay, and we know what the scanner looks like. We've covered that off in a previous lesson, and we can look for the biggest percentage gappers. We were looking for the relative volume. Um, we're looking for high relative volume, if you will. Okay, so we have the checklist of what we want from our gap scanner. So we're marking out the pre-market highs on the charts, uh, so that we can look for the gap and go. So we get long on the break of the pre-market highs. We want to check the flow. We want to make sure that we're looking at the float. Um, it's got to be a low float stock. Okay, so we're looking at low float stock, preferably under 20 million shares. That example that I used of Indonesian Energy was just 2.2 million share float. Okay, and it was trading 5 million before the bell opened. So I think last Friday it traded over almost 40 million when I left it, shares on a 2.2 million float. So that's 20 times over. It's recycled its float 20 times over. So that's just a high volatile stock and a highly traded stock. Okay, so we want to know what the float is, so that we know that it does have the potential to make a big squeeze. Um, anywhere from say 5 to 10 million can be. You can see epic squeezes. So we saw with Indonesian Energy that it only 2.2 million share float, and it went up over 100% on a number of days. Okay, so we can get stocks that will run up, 150, 200% in the course of a day. And I was lucky enough to get on one stock, Inspirato, a few weeks ago that ran up 750% in a single day. So we're looking at that, and that again was a low float stock. Okay, so that's when we start looking at our stock selection. That's what we're looking for. Okay, we really need to be conscious of what we're looking for in our stock selection. Okay, now I've got I've got this in Word format somewhere. Just let me pull it up, and I'll show this is the document that I will be providing for you guys. So I've put this down into a Word document format, so you can actually download this and keep this. It's yours forever, if you will, and you can have it printed out on your desk the same way that I've got it printed out on my desk. So if we're looking at the stocks that we want to consider, it's got everything that's why that's everything that we need to uh, choose a stock for the gap and go. Okay, we want to be looking at the position size. We're looking at second. It's actually what we've got here is word for word, verbatim instructions for you to trade this strategy the way that I trade it. Okay, so if I can't make it any simpler for you to learn this strategy, now of course you will adapt it to your style, but it's incredibly important that you start off like this. You start off trading and using this verbatim, and as you get good at this strategy, then you can actually start, increasing your size, being a little bit more fluid in your trade plan. But to start off, let's be disciplined and trade it as it's shown here on the sheet. Okay, we want to be trading it how I'm trying to teach you, and give you the directions, and exactly what we're looking for. Okay, so that's I don't think I can make it easy for you. Okay, so let me go to the next strategy, which was the momentum trading strategy. Again, the links to this page on my website are going to be available to you, uh, and you can just either go to the website and have a look at it, or again there is I will just momentum strategy checklist. So now with the momentum strategy, it's a little bit different to the it's a little bit different to the gap and go. Okay, so these are stocks that may have been gappers, or they may not have been gappers, but the gap and go refers specifically to the time frame of the opening 30, 60 minutes. Okay, we're looking at 9:30 to 10:30. Okay, so that's the strategy. We only trade for half an hour, 45 minutes until it's over. That's the gap and go. The momentum strategy then takes over. So we can trade this from 9:30 until 4 o'clock in the afternoon if you want to. We can trade it all day long. So that first pullback, if we're looking at this, what we're looking for. So we look at that first pullback on a gap or a stock is basically a momentum trade, because it's a stock that's very strong. It's surged up out of the gates. It's pulled back a little bit, consolidated, and then we jump in. So that's a momentum trade, but because it happened to be a gapper and it's still before 10 a.m., I consider it part of the gap and go strategy. But we'll sometimes see that there's a day where maybe we don't have any good gappers at all. Okay, but we have a stock right out of the gates. It surges up, and that's where we'll apply momentum strategy. Okay, so what we look for, uh, let me. Okay, so what we're looking for is basically stocks that are surging up on very strong volume. So I'm going to go ahead uh, and I'm going to look at the surging scanners, the momentum scanner that from Benzinga. Okay, so if you look at the momentum scanner, when we map out the scanners that we discussed in a previous lesson, we have the 15-minute scanner that does for momentum, and we have the 5-minute scanners that are we're looking for those surges. And this is where we get the stocks that are coming from. So we look for stocks that are it might not be gapping up, but because if it's not gapping up, it's not going to hit the session scanner. But if we start to see that it's making big moves, it's going to hit the momentum scanner. It's going to hit the surging stock scanners. Okay, so for the momentum strategy, we look for a surge up of high volume. We always want to be following the volume around the market. We want to trade volume. If a stock doesn't have volume, it's not a good trade for us. It's not going to give us a good setup. So for momentum trading strategy, we look for strong stocks with that volume. We apply the chart patterns that we know we can use to get reasonably low risk entries, and we can identify the points for breaking. Okay, so we identify the chart patterns, and then we're looking for ascending wedges or flags or a rising rectangle or bull flag or whatever. And then if we're looking at downtrends, for example, if we're getting in on the short position, we might be looking for falling or descending wedges, falling rectangles or bear flags. Okay, so those are the patterns that we're looking for when we start scanning, when we're looking at the stocks that we're scanning for on the momentum basis. Okay, um, when I see a very strong stock, I'm immediately going to go looking for a chart pattern, right? So let me pull up. Um, this has a little bit of more detail. But what I'm going to do is I'm just going to pull up the momentum, uh, the sheet this sheet here. Okay, so the momentum trading strategies for stocks that have made a quick move up in intraday due to either news or technical breakouts, etc. The most important thing is that these moves have to be associated with high volume. We want much higher, so it's relative volume. We want much higher volume than usual. Volume, we want a high relative volume coming into these stocks. So we look for the high relative volume. We compare previous average volume to what it's trading right now. Okay, so if we look for stocks that are surging up in the last 5 minutes or in the last 15 minutes. We want to see a lot of people have taken interest. Okay, so sometimes it'll be news that was the catalyst. Okay, and if we get in on a stock based on a news catalyst and it surges up, say from a seven point move over the course of say 15 minutes, it's up $7 in 15 minutes. That kind of move. Well, it's granted, percentage wise, $7 might not be big for something like Tesla or Amazon, but if it's $100 stock, if it's GameStop, then that's a 7% move in a very short space of time. If it's AMC and it gaps up from 18 dollars up to $25, then it could be a huge move. But still, it's relative, is what I'm saying. Okay, so when we see a stock that has news, let's say there's an activist investor that was taking a stake or rumored to be taking a stake. So we see news like that, we understand here's the catalyst. Now we need to find the safe entry. So the safe entry in that stock was the first 1 minute candle to make a new high, right? Um, and if we're looking at getting in on a pullback, we're looking for that next 1 minute. We wait for a pullback, and then we'll go on the next candle to make a new high. Okay. So in terms of technical indicators, we don't really need any technical indicators for trade momentum. We're just looking at strong stocks. So it's high relative volume, a stock that's surging up. That's what you look for. But in terms of red flags, and there are always a couple of red flags that maybe give us a little bit of caution. Um, if there's been 4 or 5 green candles in a row, the risk is it's getting a bit extended. Okay, so the risk is a little bit higher. We know that will only be so many green candles. There's only going to be so many red candles in a row before we have a green candle, and then there's only going to be so many green candles before we have a red candle. Okay, so the longer that stretch is, the more likelihood is we're going to get a red candle in there. So if we're buying, say, the fourth or fifth, sixth green candle in a row, we just have to be very cautious. Okay. Secondly, if we're getting in a stock that's surging up for about 45 minutes or an hour, we're buying the third or fourth pullback. Those are going to have a higher likelihood of being fake outs. We don't want to get caught in a fake out if we can help it. Okay. We want to get caught in the stocks that are really strong and are going to continue surging up. Stock that we want to be in. So the third, fourth, fifth pullbacks, they can be a little bit riskier. Now, in terms of how to buy when we're doing momentum trading, we want to buy the first 5 minute candle to make a new high. If it's, let's say, it's a bull flag setup, but if it's we want to buy as soon as the high of day breaks. Okay, so if it's a flat top breakout, or it's a cup and handle breakout, or it's reaching a key resistance milestone, then we're buying as soon as it breaks that resistance level. Or as I say, we look for bull flags. It might be the next candle to make a new high. So and again, we don't differentiate. We can look for the 5 minute chart for confirmation on this. So it could be the first 5 minute candle to make a new high um, on the high of day. So it could be a double top or a flat top breakout, like I'm saying. We can also look for potential red to green move on these stocks. Now that's that. If on a strong stock at the open, sometimes it might surge down a little bit, and then all of a sudden it pops back up. That can be good for a red to green move. If there's some news on it, again, with my stops, I'm always going to have, say, a 20-cent stop, unless for some reason I say otherwise. Something, let's say a stock with a higher price stock. Uh, I might have a stop that's $1, okay, because we're trading a $300 stock. So there's certain times when your stop's going to be further away. With a $2 stock, a small $2-3 stock, you don't need to give it 20 cents. You probably just give it 10 cents at the most. That's going to be, a little bit flexible. But we always want to aim for a minimum of a 1-to-1 ratio with when we're taking risk versus reward, profit. We really want to be aiming for that 2-to-1 profit loss ratio. That's that's what we want to be aiming for, to be sustainable long term. Uh, if we're looking at the long term trading success, we're going to risk 20 cents to make 40 cents. If we're making 40 cents on a nice pop, that's a pretty that's a pretty nice win. So, that's a good profit target. Now, if we get in a stock as a momentum trade and it doesn't break out right away, I'm usually just going to bail out. I'm usually going to bail out. I want to see a immediate resolution, or almost immediate resolution. And when we don't get that, when we don't get the surge of buying where it's expected, I usually get out of the way, because my guess is that I'm not the only one that was expecting it there. Um, you know, I keep saying that we follow the crowds. A lot of other traders are looking at the same patterns and are executing the same strategies against the same patterns. So the likelihood is that there's other traders expecting it to, at that same place that I buy. If it's a fairly obvious apex point, that's going to be the case. So if we're not getting a ton of buyers, anyone that did get in there with me around the same time, we're all going to be questioning what's going on, and eventually they're just going to start selling. And if I don't sell first, they're going to beat me to it, and I'm going to be caught in a bit of a flush. Okay, I don't want to be the last one to the door. I want to be one of the first ones to the door. I'd always rather get out break even or for a small loss than end up selling into a big flush on the downside. Okay, and in terms of positioning size, okay, let me just get this up here. Positioning size. We don't want to be risking more than $1,000 in a trade. So my max initial size is usually going to be, let's say, 5,000 shares with a 20-cent stop. Now, I may start a little lower with 2,500, 3,000 with the intention of doubling it to 5 or 6, and then adding it up to 7.5, 9, or 10 even. But I'm usually going to start between, 2.5 to 5,000. Okay. That's usually my opening position. And if the stop is a little further than 20 cents, or if maybe I have a higher risk of slippage because it's a low float stock, or a particularly volatile stock like a news play, again, we want to put in our percentage of success rate, our profit loss ratios, the average number of trades per day, our average winning profit on the strategy, you know, a losing day loss on the strategy. What the anticipated profit over the course of 1 month trading that strategy. What the anticipated profit over the course of 1 month if you double your position size. Again, set the bar so you know what you want to strive for. And if you're not sure what these momentum trades are, you can go back to the class where we go over the trading strategies. That class 6, I believe. It's class 6 that we talk about our trading strategies. If any of these are a little unfamiliar, you can review them in class 6. Class 5 and 6, we review chart patterns and strategies. Okay. So I want to get rid of this. And so that's I've just taken that was the written plan for and this is the written plan for the momentum strategy. Okay. It just helps you recognize why you took a trade, where you took a trade, and the overall setup. Okay. Now the next one is going to be the reversal trading strategy. Okay. And now for reversal trades, this is counter trend trading. So again, I'm going to use the signals here. Okay. So we're going to look at we're looking at highs of day, and we're going to look at lows of day, or we're going to look at highs of session, or lows of session. So that's really what we're looking for when we're what we're looking for with the scanners and the signals. Okay, so when I just want to pull this document up here, and I can show you this across here. Okay, so this, you get access to this as well. This is the reversal trading strategy, and we're looking for intraday extremes that have overbought or oversold. Okay, we use the RSI indicator to help us with this. Um, we're looking for stocks that are either hitting new highs. We get that on the signals, from the signals on Bazinga signals, on new lows in these extreme situations. Okay, so we need, when we start looking at the charts, we need 5 to 10 green or red candles in a row. We want to see the stock. If you put the Bollinger Bands on the chart, we want to see the stock riding the Bollinger Bands, and ideally, the perfect setup is going to have a doji bar outside the Bollinger Bands. Okay, so we go over this again in class 6 um, when we were talking about this trading strategy, but you know, uh, just want to encourage you to go back over the classes. Just don't go through all of the classes in one go and think you can retain all the information. But we go over some of examples of reversal in class 6. So, but go back to class 6 and have a look at some of those examples and what we're looking for. So the doji as the indicator of the reversal. That's that kind of thing. Okay, so again, in terms of the technical indicators on this strategy, this is the only strategy where I would say I use more technical indicators than just the volume weighted average price. So the relative strength index or the MACD are good for this to give you that confirmation, that they help you gauge the context for the current price action. And I want to see price action that's really extended. So using those two oscillating indicators, we can gauge if the stock is really bottomed out, or if it's kind of in between, or in a range. Okay, and these trading strategies are posted. The links, I've got them here. Just going to get rid of this again. So I've got them here. They're posted here on the website, on my website. That's where you can see them on the website. But and you get the printouts as well. So you can download the written strategy direct from the Teachable website. Okay, and I could show you those anytime. It's not a problem. Okay, and if you've got any questions about that, just let me know. Okay. Now, the whole point is, the reason we're talking about this strategy is, the whole point is, you want to make sure that every trade you take is coming right from a trading strategy. I found as a new trader, and even now as a successful, experienced trader, that when I deviate from my strategy, when I stray away from a lot of times, I get knocked down. I get into some bad trades, and I can take some big losses, or I'll dig myself a hole that I end up having to spend the rest of them on. I actually just did this on Friday, as I wasn't paying attention. My mind was elsewhere, and I took a trade more out of boredom than anything else, a boredom trade, which don't do it. And I'm human like the rest of us, but don't do it. And I ended up $10,000 down, even before the bell had opened, trading pre-market, and I had to spend the rest of the morning. So the first 60, 90 minutes trading my way out of that hole, taking little base hits here and base hits there to get out of that hole by going back to basics and trading the strategies and looking for the setups. So I veered from the strategies, and it cost me. It cost me $10,000 because I veered from the strategies, and then I had to spend the next 90 minutes using the strategies to rectify that mistake. So, straying away from what you know as a successful strategy can be very risky. Okay, it's really important that you stay focused, and that's part of being disciplined and maintaining composure. Okay, some days some days, being a little impulsive or whatever, it just gets to us. Like I say, it happens to me, it happens to the best of us. Okay, um, and I know what's like. It's I've done it live on the stream, and you've seen me do it. And what I'm saying is you just want to really try to make a point of not allowing yourself to deviate from your strategy. It looks better on your statistics when you go back and you review them, because every trade you take is you're going to be able to be nicely categorized with one of your strategies, and that's easier to track for your success. If you're just haphazardly trading, not only are your odds of success low, it's going to be really hard to track your performance, because you're just kind of doing this, a little bit of this, a little bit of that, and now what I want for you to be, uh, what I want for you is to be on a trading plan for um, 3 months. Okay, I want you to follow a trading plan for the next 3 months. So by following this trading plan, you want to prove to yourself that you can be successful. And I say to everybody on my live streams that this is where the large percentage of you have come from, to take this course. I say to all of you that trading is risky. The majority of people lose. Do not put real money into the markets until you have proven yourself in a simulator trading with paper money for a period of at least 3 months, where you've got a consistent level of profitability in a simulator. I say that all the time, okay? Which is why I'm saying I want you to do this trading plan, follow this trading plan for 3 months to prove to yourself that you can be successful and that you're worth investing in. Now, if you're thinking about trading, you either have, if you're in North America, for example, if you're in the US, you either have a $25,000 account with one of the direct access platforms, one of the brokers that has a direct access platform, or you're trading with a prop firm, for example, like TradeNet or whatever. I'll give you the details for TradeNet where you can actually do that. Okay, but or you're trading with a small account. And if you're trading with a small account, if you're not subject to the PDT rule, that means that you're either not trading in North America or you're trading with an offshore broker. Okay, but in either case, you're putting money behind your ability to be a day trader. So you want to prove yourself, or you want to prove to yourself that you're worth it, right? You want to prove that not only to yourself, but anyone else considering supporting you in this process. So if you're going to, let's just take a prop firm, and I recommend TradeNet Academy as the prop firm. They will give you, they will fund you a live account up to $80,000. It's going to cost you a $2,000 entry, but they will they will do this share with you of 75-25 split. They'll give you a lot more education than you're getting just here as well. So you need to prove to yourself But you also, if you're going to take a prop firm's money and try and trade with a prop firm's money, you need to prove to them as well. And then, of course, you're going to get your wife, girlfriend, fiance, partner, whatever it is, looking at you and saying, "What are you doing it for? You're wasting our money." Because you'll notice it's always our money when you're losing, and it's how much money have you made when you're making money. So it's funny how that's the case, but you want to get their buy-in as well. So you want them to support you in this process. Okay. Um, it, it, if you need to have a strategy that's sustainable, is what I'm saying. And the three strategies that I trade on a day-to-day basis, they're sustainable for me. Um, but the way I trade may not be the same as the way you trade. So I'm giving you these strategies. I've documented my trading strategy. I've put it in this course, this presentation format for you to learn my strategies and learn the way I'm profitable. Doesn't mean that you're going to be profitable, okay? I need you to try it out for 3 months and tweak it your way, because you might trade a different way, or it might not even be the same way as you want to trade. You may want to be a trader that focuses on the 60-minute chart, or does a little bit of swing trading, and that's okay. Okay, but using these patterns on a larger time frame, or maybe you may feel that it works better. To trade options, for example, you might want to trade options, and I'll come about if you're wondering what options is, or what is there going to be an options section in this course. I'll come to that in a later lesson. Okay, I'll go into more detail about options in a later lesson. But whatever it is that you want to do, you may want to have a sub strategy of that's based on one of my strategies, and that's fine. But you still have to prove yourself. You have to prove that you can be a successful trader. Okay. So for the first 3 months, of trading, I want you to aim to trade about 10 times a day, no more than 10 times, 10 times a day. So 10 trades in any given day. Okay. For me, that would actually be a fairly busy day. So 10 is, you really don't want to do a lot more than 10. You want to do, say, 10 trades a day maximum. If you do fewer, that's fine, but you want to aim for a 50% success rate. You want to get at least half your trades are winners, and no more than half are losers. Okay. You also want to implement a 2-to-1 profit loss ratio. So anytime you take a trade, if you're going to risk 50 cents, your profit target needs to be a dollar. Okay. If you're going to risk a dollar, your profit needs to be two. Okay. You need to have the potential to double what you're risking. But ultimately, because you're beginners, we're going to anticipate that you're going to close these trades with a 1.5 to 1 profit ratio, or 3-to-2 profit loss ratio. So if you risk 50 cents, you're going to make 75 cents. I'm going to be realistic, because I know that, especially as new traders, we take profits quickly. I still take profits quickly. I scale out, and it results in a lower profit loss ratio. But scaling out quickly also results in a higher percentage of success, because you have more trades that are winners. It's going to be rare that you go from being 30 cents up to being at a loss. So you have a slightly higher percentage of success with a lower profit loss ratio. For me, it works. Not only with my strategy, but with my self confidence as well, right? And that's a big thing. The psychological part of it is a big thing as well, okay? But because I'm right more than I'm wrong, um, it helps with my confidence and psychology of trading. Okay, so for the first month, First month's trading, you're going to risk $50 per trade, maximum $50 per trade, okay, with a daily target of $125. Okay. Now this is not including commissions. I know commissions as a new trader, they're just going to eat you up. So if you're trading in a simulator, it's not going to show you commissions and fees anyway. So I wouldn't worry about it. But if you're going to try this for real, just be wary that that's the case. But let's just negate the commission side of thing and let's look at the trade profit and loss for now. Okay, let's concentrate on the trade profit and loss. Okay, the point right now is that you're building a foundation for a career as a trader. So during your first few months, it's not about making money, it's about building the right habits. Okay, so when you have a profit target of $125 a day, if you lose that much, if you're down $125 a day, you've got to call it a day. You've got to throw in the towel, and that's it. That's your maximum loss for the day. And take a step back, go for a walk, go to the gym, do whatever it is that you do, and come back tomorrow. Okay? So you want to have 4 days each week where you're hitting your goal, and you allow 1 day where you hit your max loss. So that means your weekly goal is going to be the daily goal times 3. So $375 is going to be your weekly goal during your first month. Okay. Now, if you're able to achieve that in 4 weeks, if you're going to achieve that for 4 weeks, you're going to know you're going to end up well over $1,000, which is it's not bad. Okay, that's it's not bad. You know, like I said, the commission's going to eat into that, but you know that normally that would be a good winning month certainly for a new trader. Okay. So when you take these 10 trades, 10 trades a day, you're risking you're risking $50 a trade. On the total 10, expect to lose 5. Right? That's your 50% accuracy there. So if you expect to lose on 5 of them, you're risking 50. So the total losses are going to be $250. But conversely, on the 5 winners that are $75 each, you're going to make $375. So you're going to have a net profit of $125. Okay. Now, I don't want you to lose 5 trades in a row and be down $250 because the odds of winning 5 trades in a row is pretty slim. So if you're right out of the gates, lose 3 trades in a row and you hit your max loss, that 125 max loss, then you call it a day. You accept that your accuracy wasn't that great and you move on. You pick back up tomorrow. Tomorrow's a new day. Okay? It's really important for my confidence when I'm doing this. It's important for my confidence that I start the day at least my first or second trade with a winner. Starting with a loser is really tough. 3 losers in a row, the odds of bouncing back from that start to get pretty slim. The more losers that you get in a row at the start of the day makes the likelihood of you finishing that day green less and exponentially less and less more likely. Okay. Now, in one of these days, you may likely hit a winner that exceeds the profit target. That's 75 profit target. Okay, and that's great. So now, in terms of sizing on these trades, you're going to have to size based on your stop. So if you've got a 20-cent stop, you're going to take 250 shares, right? If you've got a 10-cent stop, you can take 500 shares. Having a 5-cent stop, you could take 1,000, but having a 5-cent stop is not going to be super likely. So you're going to scale based on how far away your stop is. And you may decide to take just 100 shares, okay? And just to start off with, just trade 100 share blocks. And that way, you're trading well below that $50 risk because you're not likely to risk 50 cents, right? If you lose 50 cents but are trading 100 share blocks, that's a fine way to start trading. Although I, although I value paper trading, nothing compares to the emotions of trading with real money, even if it's only 100 shares, or even if it's only 50 shares or 20 shares. The emotions of being in with real money are just something that you can't simulate. You can't replicate that in a demo account. Okay, so let's talk about scaling. Um, if you want to scale out with 200 shares, the same as you would with a thousand. Okay, and I know right now it's going to eat you up on commissions a little bit, which is why I'm saying let's concentrate on the trade profit and loss. If you're trading in a simulator, you don't have to worry about commissions or anything like that. But if you're trading with real money, commissions are going to be a factor, and it's going to this is going to be part of your tuition fee in the markets, if you will. But stick to the plan. Okay. Now there are brokers that will give you zero commissions, um, but just be careful of those brokers because the execution speeds are not as fast, or the spreads might be bigger. And of the brokers that do charge commissions, and more often than not, we're going to be using one of those. Um, some will charge you commissions per share. So for traders that are trading small shares, it actually won't be any more expensive. Okay, it's not that bad. Um, you could have trades that are like 60 cents, you know, um, per share transactions that are inconsequential, if you will. Okay. Um, so look into a broker that might give you a per share charge commissions based per share, and look at the plans. Some it's per transaction, some it's per share. Um, in this first instance, they'll be cheaper than the ones that charge per transaction. Okay, but once you start trading and you're trading more, and say 1,000, 2,000 share blocks, you might want to switch back to per trade commissions. Okay, per execution commissions. Okay, so you're going to do this for 1 month, and what I want you to see you do is prove that you can make consistent profits. Make profits traded with strategies that we've laid out for you. Okay, if you've developed your own strategy and you want to sit down with me and you want me to go over it with you and give you some feedback, then I'm happy to do that. We can set up a time and we can have that on a one-to-one basis. Not a problem. We can review that. Um, uh, but I need you to. Sorry, I've just gone lost my little piece here. But if you want me to go over the trades, I'm okay to do that with you. I don't mind going over that with you. Um, help you set you know, help you with your strategy, if you will. Um, it's okay. It's okay if you want me to, if you want me to go over it. So apologize for that. I just had to get rid of that call. I don't know who in California is calling me at this time of the day. But if you want me to go over that strategy with you, happy to do that. Happy to do that with you. And it might be something that you've devised yourself that you're good. And it's something that I want you to. Uh, I want you to practice the strategies that you intend on trading for your career. That's probably the best way of putting it. Okay. Now, you do this for a month. You've got to prove that you can be consistent, that you can make consistent profits with the strategies. Okay. Um, and then once you've done that, we can then step it up. We can step it up a little bit. It's about building consistency first. It's about, tracking your success during your first month. It's about, it's based on strategy, and you can track your success. Then at the end of the month, show the stats, and you can say, look, Tony, this is my percentage of success on these strategies, right? This is my average profit loss ratio. This is how much money I made. Okay. You want to prove to yourself that you can choose the right patterns, the right stocks, manage your risk properly. And ultimately, that's going to build the foundation for a lifelong career as a trader. Okay. So even in that first month, if you're still struggling a little bit, you're not getting quite the percentage success that you want, you, you can continue to do the 1 month plan for a second month. Or if you've done well, we switch it up. If you're feeling good about it, you start bumping up your risk a little bit. So this is, you're not going to be changing the strategy, you're just going to be increasing the risk. And what I talk about is for new traders in particular, is the hardest thing in trading is just being green, even if it's only by $10. Because what's really the difference between making $10 a day or making $50 a day? It's going to be sizing up. And the difference between 50 and 100, again, sizing up. As long as those profits are coming from a consistent strategy that you trade the same way, day in, day out, the difference between the guy that makes 50 a day or 500 a day is going to be how much size they take. Now, you may not have the emotional conditioning to take, a 500 or 5,000 share position, but that's also what we're building up over the course of these first few months. Building up your emotional, what's the word, resilience, your ability to handle a losing position and not get super stressed about it. Okay, so learning to challenge yourself, take yourself out of your comfort zone. So if your comfort zone is, well, I can lose $30, $40, it's no big deal. We want to test that comfort zone. Move it up to 50, up to 60, up to 70. Okay. And we slowly build it so you can start taking trades with, $150, $200 of risk. And you perform the same actions that you would if you were only risking $20. You don't want to be trading differently just because you have more to risk. You want to use the same strategies at all the risk levels. Okay. So when you're up in month 2 and you're trading with $100, you're trading with $100 of risk. So you're risking $100 per trade with a target of $200, $250 of profit per day. And if you lose $250 in one day, you're done for the day. Okay. You come back tomorrow, same way as we did in the last month. And again, you want to hit your profit target 4 days a week, and one day can be the max loss. So that means your weekly target is the daily times 3. So that's $750 a week. Okay, month 2, we're looking for a profit of $750 a week, and that's a very respectable profit. Okay. By anyone's standards, that's a respectable profit. That's 3,000 a month. Okay, so that's good money. So month 2, it's the same as month 1. You're risking $100 per trade. You're going to lose on 5 and have well, hopefully you're not, but we expect that you'll lose on 5 and you'll have a total of $500 in losses. Okay, so using a 1.5 to 1 profit ratio or a 3 to 2 profit ratio works out the same. You're going to make $150 on your winners, and you're going to be up $750 on those winning trades. You're going to have a net profit of $250, and You may have a great winner that exceeds the $150. You may get that 2-to-1 ratio, or maybe even a 3-to-1 ratio. But we'll just set the bar low and let you be pleasantly surprised rather than disappointed. So we'll move now into month 3. Okay. If you've completed month 2, again, putting that track record of consistency behind you, showing me that you're trading consistently, that you're making good profits, making good decisions, even when you have a higher risk, then you can move on to month 3. Okay, so month 3, you're going to be risking $200 a trade this time. You're going to have a daily profit target of $500. Okay, so we're really picking it up here. Your weekly target is going to be $1,500, right? That's over $75,000 a year profit. That's really, really good. That's good money for most people. Okay, uh, so it's way above average income. That okay, by anyone's standard, it's really good. If you're not able to achieve this in 3 months, that's okay. That's okay. It took me longer than 3 months. It took me much longer than 3 months, of course. Like I said, the first 5 or 6 months, I lost money consistently. So I'm not saying that you're going to be earning 75 grand a year inside 3 months. Um, I'm giving you the foundations to be able to achieve this. Now, if it takes you longer, it takes you longer. I'm giving you the principles to learn how to do it. Okay. So it took me a lot longer than 3 months, as I've told everybody. But then again, I didn't have a trading plan like this. I didn't have, someone like me coaching me. I didn't have a mentor, and I'm offering myself up. If you're subscribing in, part of that subscription is I'm offering myself as a mentor, okay? And you can jump on a Skype with me. We can schedule a Skype call. I'm happy to do that on a convenient time, and I'm offering that here, okay? But it took me longer. And that's okay because everyone learns at their own pace. And if you're stuck on month 1 for 2 or 3 months before you can move on and increase your risk, that's okay. You just want to keep building the foundations. Sometimes it's like you go to the gym, and some people they start off on the bar benching 50 pounds, and that's easy. So they move up to 75 pounds, and that's easy. So the next session they're on 100 pounds. And before you know it, inside 3 weeks, the bar benching the benching like 200 pounds, and then there's another one next to them join the gym at the same time, and they're still on 75 pounds. That's okay. It's okay. We'll go at our own pace. You go at your own pace, okay? Don't try and jump ahead just because you feel like it's not working for you, okay? Take your time. It's about building that muscle memory, okay? If it takes longer, there's no problem, right? But ultimately, I want you to get to the place where you can risk $200 a trade and have increased profit targets. Okay, so when you're risking $200 a trade and you lose on 5 trades, you've lost a total of $1,000, and that's okay. On the winners, you're going to make 300, and you're going to make 1,500 a day, and you'll have net profits of 500. Okay, so you may have winners that exceed the 300 profit because you've got that profit loss ratio. If you're getting a 2-to-1 or better, which is what you want to aim for, always be aiming for 2-to-1. But as beginner traders, expect that 3-to-2 or 1.5-to-1 as your average. Okay, but always aim for 2-to-1 profit loss. Okay, and if you're getting yourself set up with those good momentum trades and you get a home run winner, we'll set the bar low and let you be happy when you break the goals. I mean, think about it. If you can make a net profit daily of $500, that's 2,500 a week. That's 10,000 a month. That's 120,000 a year. Okay, and it's about scaling up. And if we're setting you, what I'm saying here, we're setting the bar low so you can, if when you're going to be extremely happy when you break those goals. But it is important to be realistic. They've got to be realistic goals. So, the first 3 months of trading, I expect that a lot of profits are going to go to commissions. If you're just putting money in there, a lot of profits are going to go into commissions. I expect that you'll make mistakes. You'll make mistakes with your hotkeys. You'll sell when you're meant to buy, and this is part of trading. You've seen me do it. I did it on Friday. I bought when I sort of sold. I got into a trade for a setup that didn't break for me, and it went the other way. So it hit the VWAP. I pressed the sell button, but I didn't. I thought I pressed the sell button. I actually doubled down on my position, so it actually doubled up. And then I started talking on the chat. So it happens to everybody. We can make mistakes. This is part of trading, okay? But as a beginner, you want to be getting yourself the survival skills until you learn. So that the longer you're in the market surviving, the better your odds are that you're going to become a successful trader. Okay. Anything that you can do to just get through and survive is good. And everyone that's on this trading plan that I'm giving you the tools. So hopefully, you can actually start to turn a profit. And hopefully, it's in the first few months, right? So you can actually start to get some, I don't know, get some reward for all the work that you've been putting in, that you've been studying. That's what I'd like to see. But I need you to be realistic and understand that for the first few months of trading, whether you're in this trading course or trading my trading plan, it takes time, and it does take experience before you can generate consistent profits on your own. Okay, so you need to set realistic goals. Okay, this is the most important thing. And when you're trading and you're trading these written trading plans that I've loaded up for you, you can download them, and you're trading a strategy that has been verified to be successful. You don't want to trade real money until you've proven that it can make money. So using a paper trade account to start off with, just demo and test out the strategies, demo and test that you can do it. That's very important. Okay. Like I said, you can't compare the emotions of having real money on the line to actually being in a demo. If you made $1,000 a day in a demo account, when you go live, expect it's going to be like 300 or 400. Okay, because those emotions are going to get to you, and it's not going to be the same, but it's important to prove with paper money that you've got something that's worth investing in. So if you're testing out a completely new strategy, say, let's say an options strategy or some type of complex strategy that's not one that I'm teaching or one that I trade, it's important to paper trade it before going live with it. It's important to test it, the success of it, before going in with real money. Okay. Now, shifting gears a little bit. I'm talking about being a professional full-time trader. Okay. Opening an LLC. And I'm going to use LLC. If you're in the UK or you're in Ireland, a limited company is an LLC. It's a limited liability company. Okay. Um, there are a lot of advantages to, like any small business owner, of trading out of a business account, right? Opening an LLC or limited company or incorporating yourself as a business, day trading, whether again, think about it, you could be a lawn mowing company or a landscaper. If you're a small business owner, if you're self-employed, there are tax incentives for forming a business. Okay, so a limited company, an LLC, or an S corps, the pass-through entities. What that means is the income of those businesses are passed on to the shareholders. So an S corps, if you're in the States, they don't file individual income tax returns based on the profits. The profits are going to be on the income taxes of the owners, the shareholders. So you don't have to worry about filing separate income taxes, although of course they do file the taxes. It's just income is paid by you as the sole shareholder. Okay, so you don't want to be getting into that double taxation scenario. Now, one of the advantages of having an LLC is that all your day trading income and expenses, and we'll talk about that in a second, they're all consolidated in one account. Okay, so it makes it very easy for your for your for your accounting. Okay, now the reason I'm emphasizing expenses is that there are and there can be a lot of trading expenses. Okay, I know I'm talking through the wrong slide at a time, and I do apologise, but just bear with me. I've caught up now. So there can be a lot of trading expenses. Okay, so we'll look at a few here that are realistic, and there might be more, but we'll just look at a few here. So news subscriptions, right? If you're subscribing into Benzinga, then it's $177 a month. You can get news subscriptions from other sources like Finviz or other things. Could be $100 a month. Other news subscriptions can easily be, even more than that. Okay, if you use eSignal, for example, there's a $170 for subscription for an eSignal, and that's just for getting adding that to your platform. Okay, then you've got the platform fees, and data fees. So if you're looking at Dash Trader, using Dash Trader with your broker, platform fees could be a couple of $100 a month. Okay. You can look at chat room memberships, whether you have subscribed to any other chat rooms, or whether it's just a generic chat room. There could be, 100, 200 a month. Data fees, $130 a month. You might have some platform fees, as I mentioned, Dash Trader. If you can easily exceed $800 to $1,000 a month in expenses, on business related expenses. Okay, and it doesn't end there either. Okay, because you've still got your telecoms, you've still got your trade desk setup, your computer setup, and everything else. You've got your capital expense on top of it. You're not, as a day trader, you're not going to be trading on your iPhone. Let me just spell that out for you. You're not going to be a successful day trader trading on your iPhone. Okay, just bear that in mind. And if that's what you're thinking that you're going to be doing, you're not. You need a computer, whether that's a laptop or like I use, or whether that's a desktop or tower format like a gaming computer. My laptop actually is a gaming computer, but I recommend if just get a good gaming computer, because the low latency that you get from a gaming computer, and you get good processing power. but those are capital expenditures that you've got. So there's a number of things. If you just think about the landscape gardener who has to buy himself a new lawnmower, every couple of years his lawnmower's worn out and he has to buy himself a new lawnmower. Then he has to buy the petrol, or if you're in America, gasoline. But why you call a liquid a gas, I don't know, but that's a conversation for another time. Um, he has to buy the tools to fix it up, or whatever. Um, we have these expenses, and we have equipment which is, as I say, our computers, keyboards, monitors, all of that stuff, and you can use a tax system that's in place to take advantage of some of those incentives, right? So I would suggest that you go ahead and speak to an accountant about the best ways of setting up and reducing your tax exposure. I'm not going to go into too much around capital gains tax, or the formation of offshore companies to reduce capital gains tax. I'm not saying that you can form an LLC or a limited company in a tax haven like the Channel Islands or the Isle of Man or the Cayman Islands in the Caribbean, for example. I'm not saying that you can do that, but you can do that. What I would say is that speak to your accountant about doing that. If you want to go and move to a location like Puerto Rico, there's a tax advantages for doing that, and trading in the sun. Speak to an accountant before you do any of that. That's what I'm saying. There are professionals that can advise you on the best ways of keeping more of your own money in your pocket, and those guys are called accountants. Okay, so if you speak to a qualified accountant, not only can they help you with the setting up of your day trading business, the setting up of your company, they can also advise you if it's worthwhile to do that in your current local jurisdiction, or whether you want to be setting up a foreign jurisdiction, or whatever. They'll be able to help you take advantage of any kind of tax incentives of small business and the likes. The reality is, as traders, we're investing money, and we're not really considered the type of people that are worthy of tax incentives, because a lot of us, when we do well, we're going to be making tremendous amounts of money. So our tax rates could be through the roof. They could be higher, which means any area that you can find write-offs or legal ways to reduce your tax liabilities, um, it's important that you are making use of them and you're not cutting yourself short. Okay. Now, in terms of brokers that charge you the higher data fees, there are some that just be wary of it. I just want to bring this to your attention. There are some brokers that will charge you more for trading under an LLC or a corporate account. There may be some that do that. The ones that I recommend don't, because what they have the differentiation of when you're filling out the application form, it says professional trader, and it's more for what they're looking for is someone that's qualified, a qualified trader with the qualifications to trade for a prop firm trading with someone else's money, like a hedge fund or something. Okay, just because you're trading out of a business account does not mean that you're considered a professional day trader. Okay, a professional trader. When you on that form, they're asking, as I say, if you have a license, if you're a license to be a broker, the Series 63 or whatever license, that then you're considered to be a professional trader, and you have to disclose that. But for the majority of us, we might be day trading as a profession, but we're not actually professional day traders. We're not qualified professional traders. Okay, so we're not. we're not liable for managing speculative investments and mutual funds and things like that. Okay, so just because it's a corporate account doesn't mean it has to be labeled as a professional trader. Okay, so that's something that just to ask your broker. Um, Double check with your broker, because I don't know who you're going to be trading with, but double check with your broker. You want to talk to an accountant as well. But if you're thinking of being a professional trader, it's important that you get all your ducks in a row and that you set yourself up in the right way. Okay. Now, I take I take a bit of so. Those of you that don't know my background, I was in the corporate technology world for over 20 years. Most recently, I was with the regional vice president of sales for the whole of the Europe, Middle East, and Africa for a multinational software company. And my career had got to a point where it was extremely stressful. And when I lost the job, I kind of took a step back, and that's what got me into where I am now. And over the last 12, 18 months or so in particular, I've taken a lot of pride in being self-employed, and having created this for myself. And I think that you've taken this path now, and what you're doing this. Um, you've done well to take this step, and you need to feel good about it as well. Okay, so the most important thing is that every time you take a trade, it's within one of those trading strategies that I've got written down for you. That helps build that foundation of consistency. It helps you track your success, and it really develop into what I hope will be a very successful trading career. Okay, so with that said, any questions? Um, by all means, ping me an email. As I say, if you subscribe, if you're an active subscriber to this course, I'm happy to get on a Skype call with you. If you need a one-to-one mentor, if you get on an hour's call with Skype, we can do that, and that's not a problem. And we can thrash out, if you want to have a look at a trading strategy that someone's recommended to you that think will be better for your style. I can have a look and go over, give you my opinion. If there's something that you're unsure about with my trading strategies, if there's something that you want more information about, just ping me an email. That's a good starting place, or drop a comment on the lesson, and I'll come back to you. No problem at all. In the meantime, that's the end of this lesson. We're now approaching the back end of the course. Uh, we've just got another section on technical indicators in the next lesson, but this is advanced technical indicators. And I've covered a little bit a bit about them today, and previously just mentioning them, but I'm going to go over advanced technical indicators in the next lesson. So I hope you join me for that one as well. And in the meantime, thanks for having the patience to sit through me waffling through this presentation. Okay, thanks a lot, guys.